What is going on? Welcome back to the channel. Today we're going to talk to you about HIMS. So 𝗪𝗓𝗧𝗛 just dropped their earnings. It is down 18.51%. I want to go over the absolute key highlights from the earnings that you need to kind of take away from all of that and some general support and resistance points. Before we get into any of that, make sure to hit that thumbs up, and with that, let's get right to it. So today it did close at 51.31, went down to 41.81 after hours. And so they didn't actually do all that bad for their fundamental earnings. So again, when I go over the future guidance and all of that, that'll make a little bit more sense. But as of right now, though, the implied move was roughly 17.34%. So even going into this earnings, there was a lot of volatility anticipated, because that 17.34% does work out to be in either direction and works out to be roughly like a 9% swing. So HIMS has been very volatile, and leading into the earnings, you kind of had that big drop on Friday. So kind of set the pretense for the earnings in general. But as of right now, the call options that were purchased, you do see a consensus for it to be roughly around that $51 to $55 range. And then the bears were kind of anticipating for it to be sub 40 to 38. So again, use that as kind of a benchmark going into tomorrow. Aside from that, though, shorts did return leading into the event, which leads me to believe that even though they've been getting kind of royally screwed on the stock price as it's gone up, but aside from that, they did maybe feel that their earnings was going to actually cause it to be green. So that's why I like to analyze this type of information. But nonetheless, 28.56% of the free float is being shorted. Works out to be 53.99 million shares overall are being shorted. And then cost to borrow minimum is negative. So that does mean that there is a broker out there physically paying people to short this stock. And at the same time as well, there's a lot of sketchy stuff happening, a lot of naked shorting, because looking here, there's 10.93 million shares on loan, 53.99 overall are being shorted. So you do have more shares being shorted than on loan. That usually doesn't jive, doesn't work. So there is some naked shorting that is happening. But going into the next couple trading days with it at that 41.81, it is trading between these 2 points right here. So right above this R2, so $41.69 is going to be a key support that you really want to watch for that to hold. If not, 38.41. And the bears, through their options, were kind of anticipating for it to be sub that point right there. Flip side, 46.99 will be that next strong target / resistance. So let me know your viewpoint on that. Post earnings, I don't believe any ratings have come out yet, but most likely tomorrow there definitely will be a lot, and that could obviously in turn cause a lot of volatility. So it looks like last couple of days you have had a lot of ratings, and I think generally it's that just boggles my mind, the fact that analysts actually do give ratings a couple of days before earnings, when that does fundamentally change everything. So it's kind of an interesting scenario. Market did just close, so the overnight is going through right now, and it is recovering a little bit, so sitting at 42.03. But regardless, anticipate a good probably 8 to 10 ratings for tomorrow, which, dependent on the results and the targets, you could see some crazy volatility. So let me know your viewpoint on this stock. Like I said, I'm going to get right to the actual key highlights from the earnings that you need to kind of take away from all of that. Give yourself a shout out if you own it, sold it, bought it, whatever else. And then one final thing, actually pop over to 𝗖𝗢𝗡𝗖𝗧. I have a link to them in the description below and also the comments for all of this information to be completely free. So analyst ratings, forecasts, ownership, everything under the sun. So definitely take advantage of that in the description below. And with all that said, let's get right to the key highlights.
𝗪𝗓𝗧𝗛 projects Q1 2025 revenue of $520 million, $540 million, with expanded weight loss offerings. Earnings call insights, 𝗪𝗓𝗧𝗛, HIMS, Q4 2024. Management View. CEO Andrew Dudum highlighted the company's advancements toward its vision of on-demand, personalized healthcare, noting the integration of lab testing capabilities and the acquisition of a peptide facility to expand treatment personalization. He emphasized the platform's ability to deliver high-quality, tailored care with over 2 million subscribers at year-end. Dudum announced the appointment of a new chief technology officer, with a focus on scaling the platform's AI capabilities to improve diagnostic tools and long-term patient care. CFO 𝗪𝗓𝗡𝗡𝗘𝗖𝗧 reported fourth quarter revenue of $481 million, a 95% year-over-year increase, and $1.5 billion for the fiscal year. Demonstrating strong momentum, he attributed growth to subscriber retention and the scaling of personalized solutions, including weight loss treatments. 𝗓𝗡𝗡𝗘𝗖𝗧 stated, total subscribers on the platform increased 45% to over 2.2 million in the fourth quarter, with over 55% subscribing to at least one personalized solution. Outlook. Management outlined Q1 2025 revenue guidance of $520 million to $540 million, representing year-over-year growth of 87% to 94%, with adjusted EBITDA expected between $55 million and $65 million. Full year 2025 revenue is anticipated to range from $2.3 billion to $2.4 billion, with weight loss specialties contributing at least $725 million. 𝗓𝗡𝗡𝗘𝗧 noted, the scalability of GLP-1 offerings and the upcoming introduction of 𝗪𝗓𝗧𝗪 are key drivers for achieving these targets. Financial results. Fourth quarter adjusted EBITDA reached $54 million, with an 11% margin, driven by the expansion of GLP-1 and personalized offerings. Fiscal year adjusted EBITDA totaled $177 million, a 12% margin. Gross margins declined slightly due to the scaling of GLP-1 offerings, though recovery is expected starting in Q2 2025. Free cash flow for the fourth quarter was $60 million, contributing to $200 million for the full year, with cash reserves exceeding $300 million. Q&A. 𝗪𝗜𝗧𝗛𝗃𝗧, can you explain your approach to personalized GLP-1 dosing for new patients? CEO 𝗪𝗓𝗧𝗛. We assess individual needs through detailed intake processes, leveraging personalized titration schedules and MedMatch technology to optimize outcomes while minimizing side effects. Craig Hettenbach, Morgan Stanley, what is the timeline for introducing 𝗪𝗓𝗧𝗪? CFO 𝗓𝗡𝗡𝗧. We expect 𝗪𝗓𝗧𝗪 to launch mid-year or early second half of 2025, with pricing aimed at affordability but reflecting the higher production costs. Daniel Grosslight, Citi. Will you pursue partnerships for branded GLP-1 offerings? 𝗪𝗓𝗪, while we remain open to collaboration, current supply and reimbursement challenges make branded options less feasible at scale. Sentiment analysis. Analysts expressed cautious optimism about the scalability of the weight loss specialty and the impact of new offerings like 𝗪𝗓𝗧𝗪. Questions often focused on regulatory compliance and operational efficiency. Management maintained a confident tone, particularly during prepared remarks. However, responses in the Q&A hinted at uncertainties in regulatory landscapes and supply chain dynamics. Compared to the prior quarter, the sentiment of both analysts and management showed a slightly more forward-looking and strategic focus quarter-over-quarter comparison. Revenue growth accelerated from $401.6 million in Q3 to $481 million in Q4, driven by scaling weight loss solutions, including GLP-1s. Adjusted EBITDA margins decreased slightly due to upfront investments, contrasting with Q3's 13% margin. Analysts shifted focus from core specialties in Q3 to the regulatory and competitive dynamics of GLP-1 offerings in Q4. Management's tone remained consistent, emphasizing long-term strategic growth and technological innovation. Risks and concerns. Management highlighted regulatory uncertainties around the personalization and compounding of GLP-1 medications as a potential challenge. Analysts raised concerns about subscriber retention amid transitions from commercially available semaglutide to personalized solutions. Supply chain durability for new offerings, such as 𝗪𝗓𝗧𝗪, was flagged as a critical factor for sustained growth. Final takeaway. HIMS and HERS closed 2024 with strong financial performance and significant subscriber growth, driven by its focus on personalized healthcare solutions. The company's Q1 2025 guidance reflects confidence in its expanding weight loss offerings, including the mid-year launch of 𝗪𝗓𝗧𝗪. However, regulatory and supply chain dynamics remain key areas of focus for management and analysts alike. Continued investment in technology and infrastructure positions the platform for long-term scalability and innovation in the personalized healthcare space.